Mines are made, they're not found. Everyone knows that. And mines cost money to make. Bayhorse Silver has just made a mine. Cautionary statements necessary. There we go. 98 million shares out, trading at approximately 12.5 cents today. But when you're an exploration company, 98 million shares is a lot. When you're a mining company, it's not a lot, especially when you're going into cash flow. So what we have is the Bayhorse Silver Mine over in Oregon. It's under exemption to the regulations, so we didn't have to spend an enormous amount of time and money getting permitting and getting the mine open and operating. We installed a Steinert ore sorter a year ago, actually a year and a half ago now, and what that allows us to do is to take the minerals we take out of the mine and reduce it by about 85 to 90%. So the follow-on costs of processing are relatively small. The mine is easy to get to. A quick synopsis of that: turn left out of the Boise Airport parking lot into I-84, go across onto the Ontario or the Oregon-Idaho border, go another 26 miles, turn right into Huntington, turn right again up the reservoir, and the mine is there. Very easy to get to. Between Boise and the mine, there are all kinds of structural and support facilities. You go by Caterpillar, you go by John Deere, heavy equipment operators. So we have a lot of support. Logistics is very important for a mine, and if you're out in the middle of nowhere and you shut down, it takes a lifetime to get it back up and operating again. So we're fortunate. The other issue and the essence of using the ore sorter is that all the follow-on equipment, processing equipment, is a lot smaller. We mine at 100 or 200 ton a day. At 100 ton a day, we would have probably 15 tons that we would actually have to process. So if anything goes wrong, the miners can literally pick it up, move it by hand, rather than having to bring machinery in and move it all around. We have an inferred resource of approximately 6.4 million ounces at 21.65 ounces a ton. It's a high-grade mine, and we actually poured our first test bar earlier this year, and here it is, 37.7 ounces. The mine is actually easy to get to. We go straight in. We don't have lifts. We don't have a lot of expensive machinery to maintain. It's strictly blast, mine, pull out, process, and take it off take the reject material and put it back inside the mine. So it's a very low cost, a very low impact mine. Now we look at silver. Everyone's worried about silver, but over the last 40, 50 years, silver gold ratio has only once climbed to 100 to 1, and just recently it's gone to 94, and that is only the second time it's been over 100 to 1 in close to 100 years. Now, no one knows what's going to happen tomorrow, but every time silver has reached those lofty heights against gold, it has dramatically dropped. Right now, it's dropped 10 points to 84 to 1. The odds are that it will drop down to at least 50 and maybe lower. If that happens, the silver price is going to go up, and the revenue we generate from the mine is going to increase rapidly as well. So the issue with the mine itself is, as I say, the miners doing jackleg drilling. We don't use heavy mechanisms, machinery. We just blast muck, and We run it through the ore sorter, which is that yellow gadget there, $1 million installed. It's the best investment we ever made. It runs at 40 ton an hour, reduces the rocks to mineralized, non-mineralized, throws the non-mineralized away, and just selects what we need, which is the good stuff. The exploration potential going forward is quite large. We know that we've got about 1,400 feet of workings. We know the zone is approximately 1,000 feet, 1,400 feet long. We've got an exploration potential of about another 1,000 to 2,000 feet on strike to the west, and the miners and the geologists who I trust continually tell me this dips down to the south. So we've got plans to do a little drilling, confirm some of the resource, and expand the current known resource. How do we get 300-400 ounces a ton from 21? We run it through the ore sorter. We reduce the volume of rock by a substantial amount right off the bat. We have a small mill. We don't need a 100-ton-a-day mill. We only need 10 to 20 tons. This one here is 25. We then put it through gravity separation, float separation, and we get the concentrate. You can't build a mine without people, and we've got fairly high confidence in our consultants. They're PhD geologists, PhD mining engineers, a very, very strong metallurgical background. So they're the ones that have helped guide us through this process of bringing the mine into production. Now, on top of the mine, we also need what we call blue sky. The prior speaker mentioned that there are no or very few wholly silver mining companies. The Bayhorse is silver gold, but we recognize that with a mine that's only going to produce 200 ton a day, and probably with an all-in sustaining cost of about, at 200 ton a day, $125 to $130 a ton, we're limited to the upside right now at the silver price about $18 million a year. But because it only cost us $6.75 million to build the mine and to put the ore sorter in, we'll go into free cash flow fairly shortly. And in fact, the production of the concentrate is starting when the miners come back next week. So we picked up the Brandywine property just south of Whistler, BC. I'm an old Whistler hand, lived there from 71 to 83. And this project has been known for years, but it's been overlooked. We took our operations geologist, Chris Baldus, took all the old data, and we reassayed the 2010 core, 1.5 meters of 20 grams a ton, 1.5 meters of 14, and it's 26 meters along strike from a earlier drill hole that was 36.9 grams a ton over 1.5 meters. So as far as we're concerned, it's the blue sky beyond. Placidome, numerous other companies have worked on the property various times, but no one's consolidated all the data. So looking forward, we see this as an excellent blue sky potential for the mine and for Bayhorse. The object for us right now is we're going to increase the tonnage at the Bayhorse from 100 to 200, increase the potential ounces from 600 to 1.2 million, expand the resource going forward, and advance the Bayhorse or the Brandywine property from the project revenue that we're getting from the Bayhorse. So we're a brand new silver producer, unknown, but we have revenue generation coming right now, and if anyone wants to learn further about it, I'm at booth 106, and I'd be pleased to hear from you. Thank you.